Wonderful. All right. Good. Well, good morning, everybody. Welcome to our FX Street session, and appreciate you being here. I have to jump from one session to another one, so I appreciate you waiting for me. I was actually just teaching a session for Pinnacle Institute. My name is Sam Evans. I'm here with you every month representing Pinnacle Institute. I'm one of the market specialists with the team there. And today we're here to talk about fair value. Focus on fair value. We've got about 40 minutes or so together in this session. And the idea of these sessions is to give you a little bit of a preview of what we can do. And I would highly recommend, good morning, John Paul. Great to have Nigeria in the house, everybody. Let me know where you're from, by the way, guys. I know, Raymond, you're in the UK still, I believe, if you still are. But let me know where you are. Type in the thing. I love to know where everybody is in the place. I just absolutely love it, you know. When I hear where everybody's coming from, Brazil, UAE, London, Nigeria, Portugal. I'm in Pennsylvania, near Philadelphia in the US. Awesome, guys. Today's session is a focus on fair value. The idea is to give you a little bit of an idea of what we do. I'm going to highly recommend that you do go to one of our free workshops. We've got one coming up tomorrow. Another one's coming up at the weekend to give you a bit more of a detail. But I think fair value is probably one of the most misunderstood concepts out there. I'm a big believer in it. I think it's a very powerful tool. The great thing is it doesn't require any indicators. It doesn't require any special pre-programmed anything, basically. It's just a very, very simple, powerful tool that I believe can really, really enhance somebody's trading. Okay. And what I like about it is it's multi-use, i.e. it works for both entries and exits. I'm going to bring up my charts right now. Can you all see the charts on here now? I just want to check that you can all see my actual charts now that I'm displaying. I'm on my Think or Swim platform. Yeah, you can see those all okay? That's good. I want to make it real clear on here that, yeah, great. These ideas that I'm putting out, and I'm going to make sure I've got your chat open on here as well, guys. All right, so everything's good, so I can see everything I need to see as audio chat. So type away questions, comments, anything you have on here as we go. This is actually really interesting. This is a trade that we just took this morning. A buy on we're looking at ES buy right now. I don't really work off of 3-minute charts, but I wanted to show you something that just happened. I literally wanted to show you something that just happened in our session. Our members were all long at 410.75 to 4,008. Very tight little stop on here. And riding this market to the upside right now, it's been an awesome trade that's, you know, produced fantastic risk to reward off of it. And we already hit our first and second targets. We're holding out for this 40.37 area. But right now, why I'm really happy with that trade, and after this trade is triggered and finished, I'm done. I'll make it very clear. Like, I'm done for the day. Okay, after that. And the reason why I'm happy to be done for the day is because this market isn't in an ideal spot right now. You might be thinking, well, what do you mean by that? You know, you're done for the day. It's not in an ideal spot. Well, what we are in is we're in a period, for me, of fair value. Okay, we're in a bit of a fair value period right now. And I want to talk about what fair value is. Fair value is basically, and I like to work off of charts, so you're not going to get death by PowerPoint, friends. I like to work off of what the price is doing. And I think the best way I can describe this is, let me show you what region of fair value is. Okay. Fair value is basically sideways movement. Okay. If I pull up a whiteboard for you all right now, here's the best way I can describe it. Okay. Yeah. Markets that do this, right? Trending up. Markets that do this are trending down. Okay. But then there's also periods when the market's long periods of time when the market's doing this. And most people hate these scenarios here. These are ranging markets. Me, I have no problem with any of these. I like all of them. But this, I really particularly like, you know, this period here, the ranging period. And the reason I like the ranging period, I can go back to my whiteboard there. Where did my whiteboard go? The reason I like the ranging period is because you can play both sides of the market. Well, here is such a period that we had right here. This was one of those fair value areas. And I'm going to actually label this for you. I'm going to put FV right here. FV, fair value. This is a fair value area. And we're very interested in this fair value area because typically this is showing us, and this is the concept I want you to think about. What fair value does is it tells us, fair value tells us when it makes sense to do stuff or to not do stuff. Fair value is the market's current opinion of price. See, right this period here, why was this market going sideways for so long here? The reason this market was going sideways for so long at this particular area was because the market was deciding, where am I going next? What are we doing next? What's on the cards for us right now? Does everybody understand that? That's what the market was deciding. What's next? And it's like going into a store right now and you know how much a loaf of bread's going to cost. You know how much a pint of milk's going to cost, right? A pint of milk or a loaf of bread, that's fair value. The current market price is fair value. That's what we know we can get it for. Obviously, the supermarkets buy it in a lot cheaper and sell it for a lot higher, right? Well, our goal is to not get the current price. Our goal is to do what? Buy as low as we can, sell as high as we can. And when we get this wild and whippy trading, when there's a lack of direction, that should be us tell you already that market conditions are challenging. Now, what's just happened here? Guys, can you tell me what's just happened here? We've broken out of these previous highs, right? And not only have we broken out, but we're coming into what? To the left-hand side. Who can tell me what's happened here? We've broken out of these highs. So we've left basically our fair value area. And then we've broken higher. What does that mean? It means price is uncomfortable. It means price is getting stretched. It means price is getting further away from where it's used to being. That might sound a little bit goofy to you, but like, I don't really... What? What do you mean by that? What I mean by that is this market is very much in a situation here where we're in a situation here where we are overstretched. Does that make sense? We're in a situation where we're overstretched. The market's gone higher, a whole lot higher. It's pulled away from fair value. Fair value is what it's used to being at. This was the established price. Call it 38.50 to 39. Now we're far away from it. We're uncomfortable. We're in new territory where it's deemed what? Let me ask you a question. Is it now expensive or cheap based upon fair value? Is it expensive or cheap based upon fair value? What do we think? Is it currently expensive or is it currently cheap based upon fair value? It's expensive, isn't it? Right? So when something's expensive, if it's overpriced, eventually, and there's not enough people to support that price, it's going to return back to where it came from. Does that make sense? It's going to come back to where it came from. So what this means here is I need to get a price. And this is what institutions are doing. They're looking to sell at the best possible prices they can get. They're looking to buy at the best possible prices they can get. Fair value doesn't give you that. Fair value is where that's the norm. Fair value is the norm. It's fair value, basically, if I can write it basically a different way. Fair value is the average. You may have also heard of fair value or the average being referred to as the mean. You understand, guys? Does that make sense to everybody? Yeah? So reversion to mean. That's what supply and demand is really all about, my friends. It's about reversion to mean. It's about price returning from where it came. So today, when we got long on the market right here, over this area, we're already buying after a rally in price. Now, here's the thing. You may look at this chart. This is a 3-minute chart. I've only shown you this 3-minute chart because you can see it. Let's look at this for a second. There's tons of fair value on this chart. Let's find some fair value areas together. Fair value here. Fair value here. There was some fair value here. Some fair value here. There's some fair value here, right? So everything's relative. Now, you've got 1, 2, 3, 4, 5 fair value charts. What's the problem? You're on a 3-minute chart, guys. You're on a 3-minute chart right now on there. Now, you being on a 3-minute chart, you're obviously going to see more signals. You're going to see a whole lot more fair value. That is not a good thing. because the problem you then have is more choice. More choice is not a good thing when trading. Why is more choice not a good thing? Because it leads you into doing more trades, right? More choice, more trades, not a good thing, friends, at all. We want less choice. We want quality over quantity, right? So you go to like a 15-minute chart, you're going to see less fair value. Now, look, there was a long period of fair value here, long period of fair value here. But fair value acts like a magnet. So what's basically happened is if I zoom in to this area here for a second, right? This was a fair value region right here. Let's clear all of these off and let's focus on this. This was a fair value region here, right? Just there. So when we pull back into this demand area, and I'm talking about this entry that we had right here this morning. And by the way, guys, we don't work in a world of, oh, this is what I did, but I didn't really do it. This is a trade that we called at 9:15 this morning. Okay, over an hour ago, where we decided to get long, and this was our target up here at 40.37. Finally, right? We've already hit our targets along the way. You can go, our sessions are recorded. We back up everything we say. But the point is, this was a little mini fair value area, so we were already stretched outside of fair value here. Hence, it made it safe to be a buyer, but with a very limited first target profit, because fair value acts like a magnet. It pulls price back to it, okay? And I got classed this as an aggressive area. Why? Because there wasn't a whole lot of distance between the entry and the fair value, but just enough to make a good risk to reward. So our first target was about 3-1. And then it was like, hey, if it pops, we've got a lot of room to go above us. And above us, you know, we've got this supply zone. I'm going to add a little bit more data on here so you can see it. I don't know why it's not letting me take a look on here, but there it is. There's my supply zone. I'm looking for it to get into a little bit higher up here. It's quite a wide area though, right? It's quite a wide area. We're actually in the region of it right now. Okay. We're in this region here, but to me, it's just a little bit too wide. I'm not a big fan of how wide this zone is at the moment, which is why I've not got into this trade yet. The risk on it's just, we're waiting for it to get up a little bit higher to 37. But again, you can see obviously where I'm looking right now. Now, how can we use it? Now we understand a bit about fair value. What we need to do is go to a longer time frame chart. So here's what I'm going to do is I'm going to go over to a different chart. I'm going to go over to a different chart here, all right? And I'm going to show you some examples of this. And any questions you've got along the way, just let me know. I'll be keeping them. Here's my FX Street charts that I use. All right, here we go. All right, let's get that out of the way. Perfect. So let's pull up a different chart. Let's look at I'm going to look at gold for a second. Gold's an interesting one. Let's just look at gold. All right, here's gold for a second, right? And what I want to do is go over here and make sure I've got all the data on here as well. Makes life a lot easier. Perfect. All right, perfect. Here we go. Gosh, wonderful. Let's look on my default charts for gold. Clean them all up. Bear with me. Bang. Now, if you look at gold, I don't know if any of you guys have been trading. I don't want you to focus on this chart here. I'm going to blow this chart up. If you look at this chart of gold here, what do you see in this region since April 2020? What do you see in that region since April 2020? Anybody tell me what they see in that chart? Do they see a trending market or a ranging market in that window that I'm just sharing with you right now? What do you think? I would agree. That's ranging, yeah? Not an ideal market condition. Yeah? Ranging, sideways, whatever you would call it, exactly. So over, and we're looking at a monthly chart. Guys, if you found gold difficult to trade, if you've been finding gold difficult to trade over the last few years, and some people have, it depends on your strategy. If you're a range-bound trader, no big deal. But if anyone you've spoken to or yourself has found it changing, here's why it is. Because all gold has been doing is trading in fair value. Gold has no real direction. Gold is a fair value market right now. So if you actually look at it, it has trended. But look, here it was in fair value. Here it is in fair value. Its next region is down here. So this hasn't got any real fair value until down here, and it's currently in fair value here. So there's space in between. So this market is exploring this range still. So now if you go to the daily charts, everything is relative, right? Everything is relative at the moment. But considering we're in fair value, we've got to get to the extremes of fair value before it's safe to take a chart. So one of the things I'll do is I'll say, well, look, if this is the fair value region, I've got to go to the edges of fair value for safe trades, right? I don't stay in the middle. The worst thing to do is trade here in the middle of fair value. That's a dangerous thing. So you've got to get higher. You've got to get to the extremes. So to get to the extremes, I've got to say to myself, well, where is supply on here? All right, well, we're getting into a region now, just about now. Well, we've got some supply. You see that? On here, we have demand. Does everybody see that? Everybody see that? And that's really what it is. It's about being safety. So now I can say, well, I'm not going to trade off of a monthly chart, but what I am going to do is look at this chart now, and I'm going to go, all right, here's a daily chart. If this whole region is the extremes, what have I got to the left-hand side here? I got another supply zone, and I got a supply zone right hiding in there. Now, this is interesting, because what I'm going to do is I'm going to remove this off. And just remember, just so you can see, this was all the area here. Hey, I'm going to do this. This will make it easier. I'm going to make this blue. This is what I like to use in my sessions in Pinnacle. Blue for monthly areas. So I got a blue area there. So we're in supply on the monthly chart, but the risk to reward's not great on that. So I'm not going to trade a zone that big. Okay, I'm not going to trade a zone that big. But I am going to go to the daily chart. And do you see this? These blue lines? These blue lines here represent these blue lines here. The difference is this is a monthly chart. This is a daily chart. See the difference between them? Monthly chart, daily chart. Now, this monthly chart's too large for me to trade, so I'm not going to trade that. Like I said, that's just too big. Okay, that's just that bit too big for me. All right. But I am going to trade the daily area. The daily area is of interest to me. So what have I got? Is I've got a great zone located in here. Now, I already know I've been in fair value for a long time on gold. And you could go to as many time frames as you want. Guys, you could go to a 1 minute chart. You could trade 1 minute charts. All right. I don't care what you do. Just know this. The smaller the time frames you trade, the harder and harder it gets to be accurate. You understand? The harder and harder it gets to be accurate. That's the thing. That's the issue that a lot of people have. All right. It's tougher to be accurate when you trade smaller time frames. This is why we tried to get you understanding where the bigger picture charts are. So I know it's going to be safe for me now to look for zones within this monthly chart here where this supply is, because I'm well away from fair value. Now, let's just focus on the daily chart for a second. So step one is I've got the bigger picture on my side, my monthly zones, but I want to highlight this for a second here and really focus on this. And now let's look at the trade that area I've got. Now, I'm going to be a little bit more generous. I'm a bit more generous on the zones. If you've ever done a session with Sidon, which I'm sure you have, he will be a little bit tighter on his areas. Me, I'm a little bit more generous on my zones than he is. I mean, still 1951, 1960, that's fine. I like to just give myself a little bit more room. I like to front run. But we do have rules at Pinnacle for doing this, but there's a little area there. Now, look at this area. This is interesting to me. Very little trading took place in this area here. Let's call it 1948 to 1960. Oh, this is think or swim, Gabriel. This is think or swim. Okay. The closest thing to similar I've seen to this, the problem with Think or Swim is an awesome platform, but I live in the US. I'm a US citizen, and Think or Swim are a little bit, they've got some really weird rules about who, you know, outside of who is allowed to use it and who isn't. It might change because Charles Schwab just bought them, but right now, you know, if you're a US citizen, you should check on, and you like the platform, you can use it. I used to obviously live in the UK, and I had students who used it, and then they couldn't anymore. But the closest thing to Think or Swim that I like is the thing. Yeah, Gabriel. Yeah, so it might change soon because they've just been bought out. Okay, but the closest I think to Think or Swim that I like is TradingView. I would use TradingView if you can't use Think or Swim. I really like TradingView personally. Gabriel, I don't know if you've got any experience with that, but I like it as a platform. I used to trade and chart with TradeStation. I haven't now for nearly a year, and I don't miss it. So, yeah, I would say the closest you can get to this would be Think or Swim. Okay? TradingView, excuse me. Give TradingView a try. I think it's a pretty neat platform. So, if I didn't have it also, and the reason I work off this because I work off of Apple Macs. Any of them, you can do the app, you can use the down the desktop, you can do the phone version, the web browser, all of them are good. But oh yeah, I just have the basic first paid for level. Yeah, just the basic level because I have all the real-time data on here, but I use it when I'm out and about sometimes, okay? But I like the value that they offer. They offer a lot of good value, okay? If you're a serious trader, I'd look at getting one of the pro versions that you pay for. It's worth it, all right? So yeah, notice the zone. I hope that helps. Notice the zone, the drop, the base, the drop, okay? And what do we like about this? Good, strong move away from the area. Very little candles in the area. And what I also like is there's a clean backyard, as I call it. Now, if you want to find, what do you mean clean backyard? I'm doing something called the Advanced Elevate session this coming Sunday, which is a week-long immersion program that we do at Pinnacle. And we talk more about that left-right action. This here is clean. This is a new imbalance to me that occurred, which is why I like it. Now, if I look at that zone and I go over here, let me ask you a question. And I've only just introduced you to this concept, okay? So granted, we need a little bit more on it, right? But let me ask you a question. Based upon this chart and what you're seeing right now, based upon this chart, what you're seeing, where would you say from here, where is the nearest fair value area? Just give me a rough number. Just look at these numbers to the right-hand side and tell me, where do you think the nearest fair value region is on this chart? Take a look at that and tell me where you think the nearest fair value region is on this chart. Good. I agree with that. I'd agree with that. So now this is I'm giving you a little tip here, right? Based upon that, I would agree that this is a fair value region. See the side? How do I quantify it? Up, down, up, down, up, down. Sideways action. You see that? Good, Ricardo. Good, Gabriel. Yep. Well done, guys. That's my fair value region. That is my fair value region. For sure. So now with that in mind, that should be my first target. And this is the bit that gets people. They're like, what? See, that should be my first target. That should be my first target. Why? Because fair value, and forgive my drawing skills. Fair value acts like a magnet. That's meant to be a magnet, by the way. That's meant to be a magnet. All right. Here we go. I'm going to do it a little bit better. All right. There's the magnet there. Okay. That's a magnet for price. Okay. Apologies. I'm drawing with a mouse. So, you know what I mean? I'm drawing with a mouse. I'm doing the best I can do here, guys. Fair value is like a magnet. Why? Because that was the previous established area. That was the last signpost, if you know what I mean. That was the last signpost of price action that was interesting to me, right? So that is likely what's going to pull price back down again and bring it back to that region. That makes sense, guys? That's what's going to bring the price back to me in that region, likely. Okay? So if the price comes back to that area, that should be my first target. Now, if you look at the size of this, and this is your risk area, let's call that 1. And let's just say we're going to say that this line across here, the edge of fair value is our first target. That's a great risk to reward. It's a great risk to reward. You need wild and whippy trading, John Paul. You don't really have that there. That could be a good target for you as an interim safe target. Like, I don't have a problem with you shooting for that area there. But where I'd really be shooting for is here. Like, fair value can be like my big second target. Like, if you want to get a little interim target, 1880 is perfectly fine, sir. 1880 is look, is the risk to reward decent? Absolutely. From there to there, what have you got? 1, 2, 3, 4. I'm going to say that that's about 5 to 1. That's about 5 to 1 to that area alone, right? Yeah. So I'm good with that. Yeah, that's the thing. Like, supply and demand, right, Ricardo, is the ultimate support and resistance. I've been trading now I've been involved in the world of trading since, this is like, it's about 20 years now, right? I've been doing this for. And when I first started, I wanted to keep things very simple, and support and resistance was my thing. To me, demand and supply and fair value is the next level of support and resistance. It cleared a lot up for me, And yes, Gabriel, this is the combination. This is supply up here. Okay, this is where those potential resting orders are. I mean, we know our orders didn't get filled in this area because, remember, if orders got filled, the price would have just kept going sideways, right? What the foiled orders, like, there's a lot of orders that got filled here because it was back and forth, back and forth, back and forth. But what did this price do here? It just went straight down because there was such an imbalance between the selling and the buying, right? So if there's a massive imbalance like that, does it make it guaranteed? Hell no. Nothing's guaranteed in this world, right? But does it make it high probability that this is a good area for a drop? Absolutely. Absolutely. And we've also got the added benefit of, look, we're in a big monthly area, right? There's supply on that. So there's likely potential good resting orders. You might look at this area here. To me, that's done. That's already triggered. That's why I'm looking at that zone there, that 1950 exactly, Gabriel. Yeah? That's why I'm looking at it in that respect. You know what I mean? Now, if you go back over to these charts I was showing you before as well, right? Look, if we go over here and we go to the trade that we looked at earlier on the S&P, you can see, look, why our target was up at this 37 area and just before the 37 area, because the resting orders are sitting right in here, right? So we had to get out a little bit above that. Target was done. That was all the target was, back to this 40-37 area, because we've got bigger picture areas in place on here right now. Okay. All right, guys. Does that make sense? Let's go back over to here. Any other questions? Just while we're going through this, any other questions? Any questions? Please let me know. So I'm at long buying and selling below the 1950 to the left of where you are. Let's go back to that chart and take a look at what we were at. Oh, I'm on the dollar index here right now. Let's just go take a look at gold again. I'm on the wrong chart. Let's bring this up. I have to also just put the full data on here, okay? There we go. Let's bring this up again, okay? One minute, guys. I just need to just do something here. You just bear with me a second. Is it necessary to have room for the left-hand side of the chart? Yeah, so you're looking, let me answer the questions here that we've got, the below the left of where you are. I'm not worried about that. I'm not worried. I think you're talking about that there. Yeah, I'm not worried about that. I am not concerned about that any way, shape, or form. That doesn't bother me. Okay. That doesn't bother me at all. Does anybody know why that doesn't bother me? Can anybody tell me why that doesn't bother me? this has already happened to the left. This here is of no consequence to this. This has got nothing to do with this, basically. Because it's already traded through. You understand? It's already traded through in that respect. Right? So do you understand, guys? They could be in waiting, yeah. But the thing has changed. Since here, it's changed when it's got to here. That's the issue. Right? That's the issue of what's happened here. Because the things are, it's not the same anymore in that respect. Right. Listen, I'm going to say don't overthink it. You know, since this area here was created, the market has not been back to that area. That's the thing. Correct. I'll be waiting for it to get to that 1950. Exactly. 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 That's what I'd be looking for. Yeah. So I want it to get back to that 1948, 1950 area to get my entry on there. And then look for it to continue down because that's the imbalance. Everything to the left I'm not worried about because there's no sideways trading immediately to the left-hand side. Yes, correct. All right. What's important is this fair value area here. Now, what do we have here as well? What do we also have here? What do we also have here, guys? The magnet, exactly, good. We have the magnet for price to come back down to this area. Yes, that is key. That is important. So we have that, right? That gives us the clue. That gives us the clue, exactly. You can look at the dollar index if we want to. Yep. We can look at that. So let's do it on the dollar index. And then we've got time for some other questions. Why don't you? Let's do it together. Let's take a look. I have to do a different symbol here. All righty. Let's just remove this. Let's ask it. So let's say the current red bar goes down. Will you wait until price retest the red bar's high before you change? Yeah, I will wait for it to get to the supply zone before I will do so. Like if you look at the dollar index right now on here, right? And let's look at this daily chart because we're at demand right now. We're in demand right now. Here's the supply here, you see? So this is the base before the drop. So I'm going to wait for the price to get to this 103.16 before taking it short. Yes. Yeah. That's exactly what I'm going to do. I don't even worry about, so I'm bearish at supply, bullish at demand. Exactly. That's the goal. Well, it's the same principle even on the previous chart, right? Same principle. Let's just go back over to it again and take a look at it. I'm not worried about, let me try and understand your question of how you're asking me here. This is the current price. I'm looking to sell when it gets to this 1948, 1949 area. So I will be bearish when it gets to that area there where I'm highlighting. Understand? That's where I'll be bearish. If it doesn't get there, then I'll find a new zone. I'll be bullish at the next demand zone. At the moment, I'm not going to be bullish until we get much lower because of these larger time frame charts. I wouldn't be bullish till at least 1825. So I go then, I'm not going to be bullish until we get down to probably at least my highest, my best area right now will be here. So well, there's a lot of space between these two areas. Yeah, it is. I'm looking for big moves, not little moves. All right? I'm looking for the big moves, not the little ones. And that is where a lot of people go horribly wrong, right? Because I want to make sure that I'm being disciplined. I want to make sure that I'm waiting for the price to get to where I need it to get to. I want to make sure that whatever I'm doing on here, I'm not being overly aggressive. You understand, guys? All right. So, if we quickly look at the dollar index, and then we're going to have to wrap in a minute. Excuse me. Look, if you like what we're seeing here, until it hits my target, or it stops me out, Marina. If you like what you're seeing here, this is why I'd encourage you to come to one of our workshops, because we spend a lot more time on this and work on it across the entire week. I would trade off of 15-minute charts. I'll trade off of 1-hour charts. It depends on the style of trading. This style of trading I'm looking here is more of a swing trade, okay? If I was day trading, I'd be more off of 1-hour and 2-hour charts and 15-minute charts, depending on obviously my strategy at that time. Does that make sense? Great thing about this style of trading is it's all relative. It's all relative, okay? So right now, if we hold demand where we are at the moment, where's fair value on this chart? Right here. There's your magnet. So T1 here, T2 here. And then I'll be getting back to being bearish again for the short term. It's all about balancing those things out in that respect. Yeah? I wish I had more time to go through all of this with you. You don't. No, it depends on your style. You don't need 24-hour charts. I'm trading futures on here, so you can do it on day trading chart. You can do it on stock charts, as well. The charts that just show you between those times of day as well. Charts are charts are charts, in my opinion. Okay. So yeah, luckily there's no requirements for either it being an either or. Okay. Yeah. Stock charts are fine. Most of what I trade is stock. Mostly what I trade is stock, Gabriel. So it's just as good. Well, guys, I'm on the end of my time. I hope that was useful for you. Listen, if I intrigued you with just the limited time that I've got of the concepts we just discussed, then my advice to you is check out one of our workshops with Sam Steiden or Steve Moses. We'll go into much greater detail on that, and you can find out about Advanced Elevate and spending a whole week with us to learn this in a whole lot more detail, okay? Which I'd really love. So register for our website, on our website for our workshop. Come check it out. You get a lot more about fair value and zones on that. Maybe consider coming to our advanced week with us, spend a whole week with us and see what it's like to be a Pinnacle member and take it from there. All right. I'm really glad you liked it. Yeah, if I intrigued you, trust me, there's just the tip of the iceberg. It's a simple way to trade and invest, but it will change your analytics. I can tell you that right now. I've been doing it like this for 20 years and I've got no intention of changing. So thank you, FX Street, for having me. Thank you guys for coming here. I will see you guys next month. Okay. All right. I'll see you guys next month. Check us out on there and have a great rest of your day. FX Street, thank you for having me. All right. Appreciate it. Take care, everybody. Goodbye.